So the next session will be overcoming the headwinds of global financial uncertainty. India as the emerging investment and fintech capital. We picked up from where we ended, investments and, we were talking about investments, now we will delve on investments further. So we have with us virtually, both together. Yes, sir, group photo please. Okay, let them. All right. So for this session, we have Dr. Soumyakanti Ghosh, Group Chief Economic Advisor, State Bank of India, member of the 16th Finance Commission of India, member PMEAC, and also the co-chairperson of the BCCI Economic Affairs National Committee. Joining him virtually, can I have the screen please here? Joining him virtually is Mr. Ratan Kumar Kesh, in fact. He is the Executive Director and Chief Operating Officer of Bandhan Bank Limited and also the chairperson of our Economic Affairs National Committee. Both of them are in Mumbai today, and as you can see, they are seated together. Sirs, can you hear me properly? Can you hear us?
Yes, can you hear us?
Yes, sir, we can, loud and clear. Can you see the audience here? Can we shift to the audience screen, please? Yeah, can you see the audience? Okay,
yes.
So that's the audience, that's the crowd waiting to hear you out. So you have got 20 minutes for your discussion. It's a conversation between the two of you, more of a fireside chat. We will try to ring a bell when you are 5 minutes to go. Hope that's all right with you. Please carry on, Ratan sir. Session is yours. Take it forward, please.
Thank you.
Thank you.
Very good afternoon to all the participants over there. Apologies that we couldn't really travel back in person. But thanks to BCCI, I got an opportunity to meet Dr. Soumyakanti Ghosh. We are so proud of him being connected to our state, and he's a celebrity. To get an opportunity, I've been wanting to meet him for some time, but to get an opportunity to meet him in his office is an honor. We will keep it slightly short and crisp for the next 20 minutes short discussion. But I have been requesting Dr. Ghosh to separately do a session after the budget probably, and we will see if we can organize one of his talks wherein he will talk more about Indian budget and also some of the other related areas. Let me delve into the topic very quickly. Dr. Ghosh, welcome. And the first question that I have for you, sir, is that economically, Asia is rising at an unprecedented pace. From your vantage point, what is the one trend that banks should be preparing for, but perhaps are not?
Okay. Thank you, and it's a pleasure to be over here. Unfortunately, I could not travel, but it's always an opportunity to speak to the audience, specifically the audience at Kolkata, which has been always a very illuminating experience. Let me address your question first in terms of the Asia. I think the most important point to note is that the global economy, including Asia, is actually going through unprecedented structural transformation. And Asia is not an island in that respect. So Asia is also witnessing a significant transformation. And most importantly, the banks in the Asian region are also investing heavily in centers like global capability centers and other centers so as to stay ahead of the curve. So it will basically foolhardy not to expect that the Indian banks are far behind. And in fact, the Indian banking system today is actually in midst of an Goldilocks period in terms of their best asset quality, in terms of their best numbers, in terms of liabilities, in terms of assets, and in terms of trying to fund the vision of an Indian growth story, which needs to grow consistently at around 7 to 8% over a constant frame of mind, a constant period of time. Now, having said that, the important point to note over here is that what are the things which needs to be done? I think the first thing is that obviously innovation. The second is basically is, as you know, the artificial intelligence, the cyber tech, the reg tech, the fraud management, the customer management, and also the fact that the Indian banks need to invest heavily in the centers. And most importantly, as you know, a lot of people are now connected at the bottom of the pyramid. So it's important that we also ensure that this last mile connectivity gets a better product structure, and also they are they basically get the facilities of the banking system as such. So if you ask me in one shot, I think it's fraud, it's technology, it's know your customer, and of course serving the people who have got integrated into the banking channel over the last decade or so.
Yeah, thank you, Dr. But I think you have touched upon that, but I'll just go slightly delve little deeper. What kind of macroeconomic shifts that you foresee that the financial sector must prepare for? I think including what you specifically spoken about technology, which can accelerate the velocity of capital, for example.
No, I think this is basically a very important point. Let me just digress a little bit over here. I think when you are looking to the banking sector, there are several trends actually occurring simultaneously. Let me first talk with the YOLO experience. Basically, today's generation is basically like you only live once. So that's why you will see that these people are actually now investing significantly into areas other than the banking. There has been a psychologically the behavioral shift also in the household invest post pandemic, and they are now getting more into the financial markets. In fact, not only that, if you actually look into the people who are retired, if you look into the funds flow of the pension funds and provident funds, that have also significantly multiplied in the last decade or so, indicating that people are also, even if age is not a barrier now, people are also investing in markets. These people who are actually old enough, they're also investing into the financial markets. There was recently a study by NSE, and it shows that actually in the eastern part of the country, and in fact in states like West Bengal, our home state, is people are actually now more fancying into areas like mutual funds and other things. So I think these are very welcome development, and they need to be extremely cognizant of that. The other important thing, if you look into the banking system, I think most of the, apart from the banking sector credit growth, the resource flow to the commercial sector has now widened. Now banks actually are investing heavily in capital markets. There is a lot of deals which are happening in PE, equity deals, VC deals, so mergers and acquisitions. So there's a lot of funds which are also coming from the non-traditional sources. So that is another area. The other important trend which is happening is basically these SME sectors, which are now adopting technology also significantly, because the government of India has rolled out platforms whereby you have to be digitally enhanced so that you can take advantage of all these efforts of formalization. And in fact, for a company, if you go into any shop floor, most of the things are getting automated. So if you have to sum, I think there is a combination of trend like more into non-traditional banking areas, which we are going, more of this YOLO, you only live once. The older people are getting into new investment habits, and also the fact that people the SME sector and other sectors are also innovating so that they can get digitized and formalized into the banking system at a speed which they would like, basically which has multiplied than earlier.
Yeah, absolutely, absolutely. Great point. Yeah.
In fact, I would also like to ask you a question. I think you heard my outlook on banking growth. As a banker, I think in the operational side, I mean, what are the technological capabilities which we believe that a bank should actually take advantage of so as to keep the upswing in this banking?
Yeah, I think great question. In fact, you address many of these tech trends that you are seeing, and in fact, SBI has been at the forefront of really taking this forward and giving a direction to most of the people in the banking industry. So one of the important things that we believe would be first creating a very scalable core. The core banking, it has been evolving, but I think to create that very strong scalable core is very important. And the core today has to be digital centric, digital ready, and then cloud ready. How do you really build a core or modify the core to make it cloud ready, digital? That's one key area. To be able to have 24/7 transaction processing, like SBI, for example, has capability to follow the sun. 24/7 trade transactions are happening globally from anywhere in the world. That's a very important area. Second is rapid product rollout. How to really catch the new trends and really roll out the product. So that's one area I would say very, very important. Second important area is the data and the AI capability. Data AI capability not just for doing the basic simplest stuff alone, because today morning I was attending a Satya Nadella session, and the quality of work and the depth of developments that are happening in AI is like phenomenal. So AI is now being used for managing liquidity risk, your credit risk, fraud prevention. So how do you really use even interest rate pricing revisions in a more dynamic way? So how do you use this macro volatility to convert into micro opportunities is something that's the second area I would say very important. Third, clearly the interoperable rails for the digital public infrastructure. A lot has been done by the government and a lot more is happening. How do you really utilize that in a meaningful way as banks and become part of the embedded platform, use it seamlessly? That's the third area I would say very important. And in general, how do you get more STP? Because customers are today wanting to replicate or at least expect the experience that they get from Amazon, Swiggy, Zomato, Blinkits of the kind. They want to see the banking is almost like similar. If they want to get a checkbook, how do you put it in the cart and then get it delivered and track it through the. So how to get it STP? And the last I would say is sovereign, which is India as a data stack. We don't like India data going out of the country, and also being more cyber resilient. So these are a few of the trends that I would say are very very important. But beyond banking, I think this all starts with more on DPI,
Yes.
and I think you as a part of the think tank in the Delhi sector, you are really doing a lot of work around that space. You will have a lot of insight. So, Dr. Ghosh, digital public infrastructure is being hailed as the productivity multiplier. So, India will really augment its own productivity through that. From an economist lens, is India underestimating or overestimating the long-term productivity gains from such a platform?
No, see, I think I'll actually, it's a very interesting point taken. I'll actually quote a study which was done by World Bank, which said, I think recently, a couple of years back, which said that because of this DPI infrastructure and other things, India could achieve the financial inclusion in 6 years, what otherwise would have taken 47 years. So that's actually, I think that's one of the that studies in public domain. So that talks about the power of how we have scaled up our digital public infrastructure to ensure the seamless and that integrated into the banking system to ensure the products are given seamlessly, the benefits are given seamlessly. Today, I think if we are doing the DPI, the total amount, if I remember correctly, is close to around 40 trillion.
Yeah.
So 40 trillion is actually around 10% of India's GDP. So that's something
massive.
that you should actually most of. And this is ensuring that there is this last point connectivity is easily, even during times of massive disruption. For example, the pandemic. The second point is that I think if you look into the UPI digital volumes also, if I remember correctly, overall global incremental volume of India's UPI today is actually 49 to 60% of the global volume. And UPI as a percentage of India's GDP today is actually around 70% of India's GDP, if I am correct. And this only started in 2016. So there are enormous productivity gains, and I think in Singapore there is a platform which actually takes care of all these UPI responsibilities. And if we are also doing all these ONDC and other things, the 700 billion, which we can actually have time, we can address those questions also. These ONDC, there are 700 million enterprises, and this also gig enterprises, the gig service delivery. So in fact, yes, there is an productivity improvement significantly, but we need to ensure that these productivity gains are actually properly used so that the benefits with the common man, which till now we have been able to do quite seamlessly, and the banks, the Reserve Bank, the banks and the government all needs to be complemented because all of them have been working together. And I think UPI has been one sort of an innovation which you should be proud of in that context.
Wonderful.
I'll tell you, I think this reminds me, I think again, we all talk, as an economist, you all talk about this DPI platform, scale-based platform. But purely from a banker, I think do you face any challenges if you have to scale it this sustainably? Because I think at State Bank also, we do enormous amount of transactions. We have 20% of the overall market share. But as a banker, if I ask you, I mean, what are the, I mean, do you face, I mean, any challenges or what are the opportunities in terms of scaling up the, in this DPI?
Absolutely. So, I mean, you mentioned about the power of DPI as a platform and how it has transformed, or it's significantly transforming further, like 6 years versus 47 years is a big deal. But DPI also involves lot many moving parts. So it's got banks on the other side, then the fintech partners, then the ecosystem players. So there are far too many players in the whole ecosystem. To get all of them and then still deliver a superior experience, manage the volume is one big challenge. Because every hop creates one more possibilities of inconvenience. Once the things moves very fast and sort of no failure is, it looks pretty exciting, but the moment there is a failure, the consumers don't feel it easy because the takes for a simple example, Amazon is selling a product of electronic goods of another brand. When something fails, Amazon says, I was only an aggregator. That the seller says, I sold the product, I don't own the brand. The brand guys will say, but I was far away from the chain. So that's a problem. That's one area. The second, as the volume is exploding, and I think UPI volume has demonstrated it can be really phenomenally large than what we can think of. In fact, in our own data structure, the data storage space, we looked at 3 years back, it has exploded 300 times more than what we could even anticipate. And I could believe what SBI would be going through or HDFC would be going through. So in that scenario, the failover design, the capacity planning cannot anymore be an IT back office job. It has to be like industrial grade, like a large steel plant, how they plan for their whole capacity, that has to be of that capacity. Third, very important point, I would say the country is facing today that as DPI flourishes, it increases the surface area of cyber attack. Because there are far too many changes. So how to really prevent the cyber attack? And the fourth one, therefore, is clear governance and accountability. If I am an aggregator or I am a bank, I am selling a third-party product who is depending on another fintech player, who is depending on another NBFC, this whole chain, if there is a data leakage, who is accountable? Is the bank accountable? Who is clear accountable? That's very important area to maintain the audit trail across the value chain and make people accountable, have governance rules, have regulation around that is going to be very important. The legal framework has to upgrade to do that. And finally, I would say, how do you really manage this whole digital divide? This is fascinating space. India has adopted very rapidly from a straight to the mobile journey, forgetting almost the internet journey to that extent for the larger population. But how do you really manage the digital divide? A lot of people still not be so savvy to digital. Do you leave them behind or really make it simpler and take them around? So that would probably be my thoughts. But I think it therefore gives me a sense that while all of these are looking great, Dr. Ghosh, but is there a question on the financial stability and innovation combined together? For example, the AI-led credit, embedded finance are scaling rapidly. But do you see a systemic risk? I mean, from your standpoint?
That's a very important question. In fact, as I was saying, I was trying to, I was thinking through the same process. I see there are a couple of things over here. Yes, there is an element of risk. I think if you just ask me today, you know that the number of digital first away systems, sometimes on a lighter note, sometimes I think that maybe those were the days when you used to keep cash under your pillow or something like that. Because in that case, even if you lose cash, you will only lose that amount of cash. But today, if you lose, you lose the entire ecosystem because your entire banking accounts, the entire amount of fraud will actually happen. So that is first thing. And as a systemic risk, I think what is most important is that, as you directly said, that the banks most of the time has to integrate with a platform which is outside the system. Right. For example, the system of buy now, pay later. So this is basically their systemic risk account, which is not within the banking system. The bank act would ensure that is also integrated seamlessly into its digital infrastructure so that it can do. And also the other type of risk, as you know, in any credit risk, there is always this sanction, then there is underwriting, then there is inspection, monitoring. As from the Bandhan, which comes to Eastern India, you might speak. I mean, as an operating officer, you might know how other risk involved. So yes, there are systemic risks involved. One is for the traditional banking which you are doing. Other is because of the banking which is now integrated more with non-traditional banking sources, whereby the consumers also are making a lot of amount of transactions. So I
get your point. Absolutely wonderful point you made. But let me just quickly ask because time is running short. India's financial inclusion is increasingly tech-driven. I think with Jandhan, 41 crore or more than that customers have come into the fold of financial inclusion. From a development economics perspective, is inclusion translating into measurable economic uplift, or do you still have structural bottlenecks?
I think let's talk about the positive thing first over here. I think we have today around 57 crore Prime Minister Jan Dhan account.
Yeah.
The total amount of balance in the system is around 2.8 trillion.
Yeah.
And there has also, I think, the World Findex report, the global Findex report shows that 90% of India's people are now banked. So I think that's a positive part of the story. The other important thing is basically if you look at the Prime Minister Insurance Scheme, the Prime Minister Jal, so all these schemes are also working well. But what is important is that because of this, tech orientation and integration, I think a lot of now the transactions are now happening at the bottom of the pyramid.
Yeah.
For example, Prime Minister Shanidhi program, for which we had actually run a study or looked into the Shanidhi program. We saw that actually the credit was working as a multiplier. There was a clause which was involved over there that if you repay back the loan 10,000 rupees, you will get 20,000 rupees. If you repay back 20,000, you will get 50,000. And we found out that around 60 to 70% of the people at least have paid the sum amount and taken the second round. So people are also at the lower end of the pyramid. And if you give any people responsible, that doesn't depend on which end of the pyramid you do. If you are responsible enough in terms of credit behavior, and that is important. This system is actually inculcating and putting the data in place where the banks can also reach those have-nots. And the other important thing which is important over here is that this scheme of Lakpati Didi, which is now integrated across the India, including in West Bengal, in southern states, northern states. When we were in Finance Commission, we were asking these ladies, what is your next aim? So they clearly said, our next aim is Crorepati Didis. And once you empower the women at the bottom end of the pyramid, they actually can do wonders. They can drive everything in terms of financial decision making. They can drive every types of elections, voting. So at the end of the day, that is the important thing which we wanted. And we have heard very good stories about this women empowerment, not only their families, but also their male counterparts over there. So I think these are some of the things which you should be proud of and take advantage of, because at the end of the day, the women are the most important part of the financial ecosystem, if we have to believe. I'll actually, if I have time, I'll ask you a question is that I know you are a very good big player in the MFI segment. We have also heard very good stories about the MFI segment, but the MFI segment also comes up with challenges also. And given the fact that we are now getting all those unbanked people into the banking system, and I think from that perspective, your bank also has been trying to do that. So what are the operational challenges, or if any, or the challenges or opportunities or struggle you face when you operate in this segment?
Yeah, I think you addressed that point quite beautifully, that women empowerment, more than financial inclusion, giving financial empowerment really multiplies the overall economy. Not only that they create jobs for themselves and many more, but they actually multiply as effect. And we do that fairly well. Although we are an universal bank, but a significant portion of our effort goes in really creating that financial empowerment at the bottom of the pyramid. We've got roughly 11 to 13 million customers. All of them are women. All of them are entrepreneurs. They do some business. Each of them employ 2 to 10, 20 people. So that's they are creating jobs. But what is happening, Dr. Ghosh, that while we look at the standard credit underwriting metrics like the bureau score and then some income assessment that you do, household income by visiting their workplace and all, if we could get a bit more data of cash flow, the GST data and surrogates lot more organized way, we could probably take more underwriting decisions, which is non-structural data. So that's one area I would say is important. But at the same time, I can see that as we have done more and more of this MFI lending using the tab-based model, so the KYC, eKYC, Aadhaar-based KYC has really simplified the onboarding part of it. And in some sense, the digital journey that we created has actually reduced the operating cost for us. So we can now do it at a lot more economically for them than otherwise. So that's one benefit that we have. But at the same time, the data sparsity continues to be a challenge. Their understanding becomes a problem. Income volatility remains. They are subjected to climate risk or some of the epidemics or related risks. So it doesn't fit into the exact model of, let's say, IRAC norms. How do you really fit that into this? So that's one challenge, I would say. But as banks, we have to always constantly keep following it up. So it's strict track balances to be absolutely right on the right side of the governance and the regulation, which you always do. So that's one area where maybe the MPIN and the other guardrails are actually helping. And Last piece I would say is this bias and conduct risk. You look at the historical data and try to create a scorecard based model, and most often that model may not be valid for the future for that segment, right? So how do you really keep balancing this scorecard model and marry that with a lot more alternate data and physical field? So it will continue to remain as a touch and take model. So my employee base is 70,000 plus, and we are not a very large balance sheet. So that will continue to be remain. That's one challenge I would say. But maybe I'll just ask one last question if you have time. I think probably we still have a couple of minutes time. Dr. Ghosh, given this geopolitical fragmentation, bit of inconsistent tariff scenario, do you see capital flows in Asia shifting? And what should the banks do to sort of position themselves?
No, I think this is again an important point. We are in an area of where uncertainty is the new norm. So basically, uncertainty has become the new certainty. If you look into Asia, there are different sorts of countries. China is one country where you don't know what is going to happen. But Japan is one country which is also externally security oriented. Vietnam is one country which has significantly gone up. Yeah. And Indonesia is another country which is also following up. And India is actually trying to follow a China plus one strategy. Yeah. So I think all countries are differently placed. But I think in this respect, given the fact that India has an opportunity in terms of an young, vibrant population and demand, I think India stands a very good chance. If you ask me in terms of the significance of capital flows, I think one point I would like to share is that there has been a lot of banking sector news recently. The Reserve Bank has actually undertaken a lot of regulation in terms of liberalizing real estate, ECB acquisitions. So capital is going to come into the country for mergers and acquisitions, and I'll not be surprised because in the new FDI flows which comes into the banking system will be more oriented towards the banking system, because at the end of the day, FDI flows into the banking and is very important to fund all this type of new activity which the Reserve Bank actually has liberalized. And my sense is that at the end of the day, FDI flows are actually more stable in terms of a country and country India benefiting from it. Yeah. So capital flows will of course flowing, but the orientation could actually change more towards funding these type of activities.
Okay.
Thank you, sir. Thank you so much. Hope you have come to the conclusion of the discussion, or have I interfered?
Yeah, I mean, one quick area that we both sort of talk about is the specific domain around AI. And since I'm coming very fresh from Satya Nadella program, I would say AI is here, it's real, and it is going to be transforming at an unprecedented pace, more than even we can think of. And I think we've got to really, rather than thinking whether AI, we have to really adopt AI. Agentic is the way to go. But I think we'll talk more about it.
And just one point is that I think, yes, there are, I mean, if you ask me today, yes, there are opportunities in AI, there are challenges in AI. But the important point to note is the AI gives an opportunity to reinvent, reorient, and reskill yourselves. And I'll not be surprised if actually at the end of the day, and studies show that artificial intelligence leads to more number of jobs being added on a net basis. So we may actually lose some jobs in some areas, traditional areas, but there will be significant opportunities for scaling up. And I think at the end of the day, given the fact that Indian banks and all of us are now geared towards a digitalized, personalized financial service ecosystem, the role of AI-led opportunities will only multiply in the coming days and not diminish the opportunities in the financial sector. So I'd like to end here and thank you for all the.
Thank you, Dr. Ghosh. It was wonderful talking to you. Thank you, BCCI, for giving us an opportunity.
Yes.
Thank you so much, sirs. I mean, we'd like to, I would have loved to have this physically here, but then it was so delightful to have you both conversing together on such an important and pertinent topic. Would like to emulate this going forward in the coming months, maybe in Calcutta, right here, and let me manifest that a little. You are both part of us, so your mementos will be with us whenever you are back here in Calcutta. We'll be handing over that. Thank you once again, and can we have a final great round of applause for the both stalwarts in the banking sector of India. Thank you so much, sir. Thank you.